Okay. Because right now we see a sell off in the crypto. It's not new news. But what's new is the US stock market is seeing the biggest drop that it's seen in a couple of years, or actually ever, actually. The biggest drop that it's seen in one day ever. Okay. So we know that there's powers that be, Illuminati, special groups that control the world. But there's only three countries right now that don't have a Rothschild's bank. And obviously, this is Iran, North Korea, and Cuba. And we've been seeing a lot of news about North Korea. But now Libya, obviously, we know Libya is not on the list, right? But Cuba, Iran, and mainly North Korea. A lot of news going on as far as nuclear war and all this propaganda. Okay, so International Monetary Fund, we know they control everything. The World Bank controls everything, and they've pretty much used, my family in Kenya, Zimbabwe, Indonesia, Korea, etc., to pretty much further their gains. Now, the IMF, World Bank, they've suckered most of the governments around the world into accepting loans of nothing, just fraudulent, non-existent fiat currency, and charge them interest in turn. Okay, these governments, like U.S. citizens, the counterparts, they voluntarily elected into this fraud, unknowingly pledging to repay a loan. Okay, a non-loan at that. Now, the money was pledged for all the labor and their respective citizenry, and all that pretty much you own, including your sovereignty. Thus, the citizens become surety or collateral that backs the securities sold to the highest bidder every single day, okay, in what is called a bond market. And this is the actual bond. You can actually see the bond number there that's on the birth certificate. And this is why the UN is demanding that the members all be made citizens and have a birth certificate. So you're actually traded on fidelity as a bond. It's registered as a certificate and tied to surety, collateral, or labor. So there's a bond that's attached to the birth certificate and is sold on the bond market. And then we're taxed to basically pay back this as interest. So you could almost say we're suckers. Hook, line, and sinker. But the Amexem Moorish nation, its imperial government, considers Kenya, Zimbabwe, Indonesia, and Korea as part of and partial to the Amexem Moorish Empire. So look on the back of the Social Security card. You can actually see that there are truly numbers. And these fiat currencies, obviously, they are tied right now to crypto because people are using them to get into crypto. But eventually that will be no more as more and more people use them as a medium of exchange. And you're seeing more cryptos that are coming out to meet that need. So the Rothschild's influence on China, and we've been seeing a lot going on in China as far as regulation and propaganda, as far as their exchanges and how things are traded in the crypto space. So as of 2014, the GDP has become one of the largest in the world. Their growth requires consumption of natural resources and finished goods, and it also increases the demand for Chinese investments. They've got a strong economic influence, and they've got a big impact on international trade and the foreign exchange market, as well as the crypto market. Even though the currency up until recently was not actively traded, it's now actively traded in our markets. The influence that they have is huge, and they've recently gotten reserve currency status in the last few years. Now, their currencies, known as the renminbi, the principal unit is the yuan. It was not freely traded up until 2005 when they kind of loosened the peg. It was pegged to the US dollar. I believe it was from around 1993 to about 2005. We had a peg, and they've loosened some of the capital flow restrictions due to pressures with their trade partners. There it goes, renminbi. So we're experiencing the peg breakdown. On the next slide, you're going to see how from 1994 that peg was introduced, and it was basically to help the exchange rate and help move in the manufacturing sector on over to China because it pegged the renminbi to the dollar over the last 11 years. And every time a peg is shifted, it affects any currency that's affected or pegged to that particular currency, in this case, the renminbi and the US dollar, and the rest of the currencies, because most of the world's holding these treasuries here. So you could see that the peg lasted from about here till there. We come here, and all of a sudden, it was repegged after they unpegged it and shifted it in 2005. And then there's been a few shifts, but the market basically has been hit pretty significantly. Now, what's happened? They sold off yuan and treasury bonds to support yuan in global trade because they can't have a weak currency because it definitely affects their import sector. As far as things that come in start to be too expensive if a yuan is just too weak. But a yuan is too expensive affects their export sector. They're big on exports. Now, interest rates at all-time lows. I mean, right now you can see that the capital interest rate is kind of upside down, and it's starting to be transmitted into the actual economies, especially you just seen Asia taking a dump, not just because of what happened in the U.S. markets, but what's going on globally, geopolitically. So we got an inverted yield curve, typically indicates an approaching recession. You think? Government debt all-time high. Tell me something I don't know. Corporate debt's all-time high. Personal debt all-time high, while rates are all-time lows. Why? Because they owe the debt. And if the debt has high interest rates, it means it has high payments and they can't afford those payments. But what are they doing with this money? Well, derivatives. We talked about it the other day. 1.2 trillion derivatives. So growth for derivatives at all-time high, especially over there in the East. Western banks aren't really doing much asset-backed securities and collateralized debt obligations because they wouldn't made their mess in 2008. Now the East is catching up with these collateralized debt obligations and wealth management products as they got these off-balance sheet debt obligations and all this stuff. And they're taking some of this money, these loans, and buying gold with it, okay? It's not the citizens buying the gold, it's the actual government. You can see down here the Chinese government's demand and appetite for gold's gone through the roof. And how does this play into crypto? It plays into crypto because if the demand and appetite for gold's increasing, they can't go in there and short it with COMEX in the futures market when you have to have accountability and really have the assets you're claiming that you got that you're trying to sell. If there's an actual cryptographic audit and paper trail, you got to really have the gold to sell. So right now, the price of gold is being suppressed so that they can buy it before the market actually starts to collapse. And we're actually starting to see that collapse happen now. Look at COMEX physical gold delivery. It's blue. Shanghai's physical gold delivery is the red. And the gray is the actual gold world mining production. You see what's going on. So the estimated Chinese gold reserves, you can see the cumulative total import there. This is the cumulative domestic mining. That here's the official reserves, and that's the jewelry base. So what's been growing? The imports have been growing exponentially and increasing leverage, but the profits aren't there to meet the leverage. How do we understand this? How will the debt be paid back? If I got debt that needs to be paid back, it's going to be based on its interest and its term. Well, a lot of these bonds are rolling over to maturity and they're coming due. And right now, the interest rates are higher. Interest rates are higher means the payments are higher, and they're not performing. You can actually see here, okay, the interest rate coverage based on the liabilities, okay, the ratio and relative to the assets, things don't add up. Record maturity in the debt, the bond engine is faltering because their ability to roll this thing over is just not there. And the cost rises. What's to happen? Well, no choice but the default. It's already happening all over the world, you guys. And I was talking about this a few months ago, talking about the sell-off in the markets. But what are they moving to? Well, China, Russia, these other countries hedging their bet with blockchain. China talked about moving to blockchain back in June at a 5-year plan. They're moving exponentially fast towards that plan. Bitcoin being exchanged in China, all-time high after they could claim to impose a ban. And most of the Bitcoin is traded out of Asia. In a recent report out today, Goldman Sachs says the future of money, banks point that 80% of Bitcoin volume is now being exchanged in and out of Chinese yuan, second highest being the US dollar. The yen actually has moved up as well. Introducing blockchain and cryptocurrency. I don't need to introduce this to you. I told you I was going back in time to show you guys some of the slides here. But the biggest thing is the peer-to-peer technology, blockchain, smart contracts, no central authority, no banks to come in and regulate this stuff. And man, when I created this slide, it was 2,283, and they're worrying about it being about 6,000 something. So we talked about the dinar dirham, but right now there are so many other currencies that are coming. In this slide, I was talking about how making gold pegged to a crypto that was using blockchain technology would change the game. I showed you guys this when I talked about DGD the other day. I'm showing you this now when we talk about Haven Coin and Nubits. Okay. And that's why they attacked Tether. These central banks, okay, BRICS, the AIIB, IMF, all of them don't want to lose their stronghold. Okay. In fact, they don't want to lose a market share to each other, but they sure don't want to lose it to a decentralized ledger like Bitcoin. It was a problem for them when China started to gain rise to prominence. Now they're all in trouble. But they're all in trouble. Why? Because the dollar is mainly used as a reserve currency, and the dollar is mainly in trouble right now. So where are we at today? I'm trying to kind of rush through. Declining demand for the US dollar in international trade. You can see that the petrodollar is what has kept the dollar held up with the blanket demand. If the Saudis are no longer using the dollar to sell oil and then turning around and taking their profit and buying US treasuries, it's bad for the US dollar. You can also see that China is dumping US treasuries, but also China and the rest of the world are dumping treasuries. They're also dumping US stocks. And it's not just China dumping US stocks. Big money's been dumping US stocks. And you can see why. Okay. And you can see it's further proved today with one of the biggest collapses that we've seen like ever in the history of the market. And where's that going to go? Right now, there's too many derivatives, fiat money, fiat assets, wealth management products, collateralized debt obligations, right? We can go on, right? Collateralized mortgage-backed securities. I mean, this stuff that got us in trouble in 2008. There's all this stuff that has no value behind it. And the only value that's going to be there is true assets that have a digital cryptographic auditing trail or something that can be on a blockchain where there's instant trust because it's open source and public ledger and it can't be altered. Okay. So Chinese debt fueled the economy eerily echoes the 2008 collapse. And you saw this coming previously in the recent years. But what were they doing? Last year, they were preparing for this. They changed and reversed a fiduciary rule. I said fiduciary, a U.S. fiduciary rule that was designed to protect you. Okay, Obama put it in. It was an executive order that was there to pretty much require them to put you first and protect your best interest. Well, that was repealed in June 2017. Okay, they repealed it. Now, who holds most of this debt? It's not just foreign countries, but a lot of this debt is held by U.S. citizens, okay, and U.S. corporations. You can see that 52.5% of this debt and stocks are held by U.S. individuals and institutions, not just foreign countries, but U.S. institutions. Now, and individuals, if you got these foreign nations starting to back out, and where are they putting the money? I showed you that money is strolling its way on into crypto, okay? You can see it by the charts in crypto exploding last year. Every time a peg shifts, it affects everyone. It's systemic risk. We've seen the market collapse in the US, and now 6 o'clock rolls around, and it's no coincidence that things start to explode inside the Asian market. So 7 stages of an empire. We have sound money. They add in layers of public works, build a military, start creating this war, debase the currency, loss of faith, move to the next fiat currency as gold accounts for it. But crypto is now changing the game. It gives us the ability to have access to a currency that can be used as a medium of exchange without having to worry about centralization across this nation, baby. The dollar has collapsed, just tanked ever since it came out. It's lost 97% of its value and probably even more. And what happens to all fiat currency? Well, we know that it eventually always returns to its intrinsic value, which is zero. Protect yourself, prosper from the dollar's demise. Turn your fiat into real money. And that's physical gold and blockchain assets. And therefore, you won't be sitting here like this. Okay? So With that being said, I will see you guys next time. Shalom, Rahabat, Hotep, Salem, Islam, peace. Oh, questions. I know there were some questions. I'll answer the one question, or a couple questions actually, because we're a little bit over, so we won't go too far in.